Hello, everybody, and welcome back to another Commodity Insights podcast with the crew at Farmers Trading Company here. I think we'll get started talking about the wheat market first. It's been a wild ride to say the least this week. I mean, we're up 25, 30 cents one day, down 20 the next day, up today, and then end up closing down. I guess we'll get started talking about that wheat tour, Vince. And what did you hear about that? And what are they saying about the conditions down in Kansas?
I think from what you looked at, and one has to keep in mind that when we look at the wheat tour, they hit the best areas on Tuesday. Day two, which will be Wednesday, and day three, which will be Thursday, get into some of those drier areas. But you were pegging some of the best fields and best conditions they've seen in 24 years when you looked at that. So I think that's really what hit us. And when we step back a little bit before that, the early morning rally came on some of the Soviet agencies coming back and once again lowering that crop by 4 million metric tons. So between the different agencies, they had dropped that crop 8 million metric tons this week from 93 million down to 85 million. That what gave us that early spark, and then we came out with the Kansas wheat tour, just kind of took the wind out of the sails. And I think not that it's a huge thing in there, but we did see for the corn and the beans, especially the Eastern Corn Belt, we did see some forecasts that were warmer and drier than they were on Tuesday.
So overall, I guess the two big news stories out of that wheat market is that Russian crop and the frost that's hit that, and how they're cutting those estimates. And then we have the more favorable crop down in Kansas that's significantly better than the last year's. Overall, which story I guess is going to win out here, Vince, or how long should a guy wait on this thing before maybe making some sales?
As we looked at it on Monday, we would have liked to seen this thing get somewhere around that 740 area in KC September. It got to 23, I think, on Monday and just shy of 20 on Wednesday. And if you get a rally back, I think anywhere near Wednesday's highs in that 710 or higher, it may not be a bad point to try to protect some prices and what you got, whether you're doing it at the elevator or however you decide to do it. Because if you got a good crop coming, world stocks aren't all that tight. We do have wet weather in Europe that aided us on Monday. Also, I don't see anything that is supposed to really be backing that off short term in here, but we'll have to see where that goes. But I think doing something $7 plus in that KC September, not a bad idea.
And then I think rolling over to the corn market here, Vince, had a couple nice pushes the last few days. We made a nice effort this morning, and then it seems like we kind of rejected, and we ended up breaking below the last couple days lows and made some new weekly lows in here and finished pretty much down near the bottom. Any news, I guess, that kind of spurred that pullback, or was it just the wheat dragging it lower? And where do you see that corn market going here in the next week or two? Do you think we make another run up at this thing and maybe can break through that $5 mark on the December crop, or what are your thoughts there?
I think the initial surge in here was following wheat and beans higher, especially the wheat market. And then when wheat turned, it helped the corn to go lower. One has to think that that warmer, drier forecast did take some edge off of that early rally also. But one has to think if you look at the wheat and the corn market together, neither one of them took out Monday's highs. And when that failed, you got to believe some of the longs were maybe taking some money off the table, maybe emboldened a few bears to try to put some price protection in. And where does it go? I think you really got to see where you hold in the downside here, Connor. You could stay in the trading range. I don't think we fall out of bed short term, but could this thing maybe take you down into the lower to mid 450s in that July? Yeah, and then go back. And the key gets to be the next rally you get up here, we better be taking out 475 and in July and taking out that 495 and decent closing above them, or maybe we're going to be done in here. It's a little early in the season, but it's happened before.
And some of those planning progress numbers out on Monday show that we're right on pace, I guess, with both the corn and the beans with what our national average is. But the Iowa and Illinois both were about 10 to 12% behind on their planning pace. Do you think that that's going to hurt this market, or do you think that's more favorable? Because though Iowa was in quite a bit of a drought, and now that's definitely switched and that narrative's gone. Or how do you think that plays into this market?
I think you really need to get to the end of next week, just before that Memorial Day weekend. They're calling for more rain at that point, maybe some heavy stuff, and just how that shakes out, where planning progress is at there. Once you get to that point, you're going to get to the end of planning dates for some of these people, and they're not going to want to do corn, and they're going to switch. All that can make a difference. But until that point, I don't think they get real excited about corn running away uh, short term, or going down the other way. When you talked about the Illinois and Iowa, especially Iowa, as dry as it was, and maybe now alleviating a lot of that drought, one has to think it can be a negative in there. But again, you have to have it planted before it makes a lot of difference.
Moving on to the soybean market here, I'm just looking at a couple of the charts there, Vince, and it looks like we did take out Monday's highs there. And it looked like we
Yes.
were having a pretty good day, and then it kind of fell apart here at the close and ended up closing a couple cents down. Um, what are your thoughts there? And I know there was a crush report out today. Is that kind of what crushed the market too, or what were those numbers, and what are your thoughts there?
I think the edge got taken off the early rally when corn and wheat started to fall. But the real one came, as you noted, when that NOPA crush number come out. They were looking for maybe the second largest crush number in history. They were looking at 183.1 million bushels, came in at 166.03. So you're somewhere just over 17 million bushels less on that crush. That was the lowest April crush in 3 years. So I think you kind of changed some psychology. As you noted, I did like the fact that early in the day the beans took out Monday's high, but taking them out and closing above it becomes another factor, as we all noted. Bean stocks did drop also, somewhere around 13 million pounds to 1.755 billion pounds. Not a bad number, but you take into consideration that number. You look at the disappointment we got on Tuesday when the Biden administration did not use the veg oil from China as part of those sanctions. All goes against that bean oil market a bit. We'll see where we go. The beans and everything still have time seasonally to get some rallies in here, but it would sure be nice to get them sooner than later.
I think we'll move on to the livestock markets next and talk about this cattle market. It's been volatile to say the least, I guess, in the last couple of weeks here. Um, Yesterday, I guess we had quite a breakthrough, and we're up $4 or $5 in the feeders there. And then news out, I guess, that the box beef was quite a bit higher. The kill was down this week, and that was kind of what drove the box beef higher and helped that cattle market out. But yet today we didn't have much of a, I guess it was a pretty quiet day, up and down, nothing too crazy there. Um, where do you see that going in the future here, Vince? And is there any fundamental news besides that box beef and that kill that a guy should know about this week?
Nothing fundamental, and we're waiting to see what cash does. By the time you got to late Tuesday, had a few, maybe 100 head or so traded in Kansas at a 184, which is fully a buckle lower, but not enough in there to give yourself any kind of trend. The Packer had to heal pretty good when you, by Wednesday noon, you were getting that choice box beef up over 307, and we struggled for a couple of weeks getting over 300. So that should heal that packer up and allow them to pay up if they have to. And part of that's going to depend on the demand. Their slower chain speed has worked well for them. Um, did we backing up cattle? I don't think we're backing up a lot of cattle, and I think we got lesser numbers, so it all works out. But we really need to keep that box beef going. We need to keep demand going. I don't look for a runaway in here short term. I would have really liked to see maybe another $2 or $3 rally on Wednesday, or maybe we can get it on Thursday. But if you got a decent rally on top of Mondays or Tuesdays, I think you got to maybe do some price protection, at least for the next month or so, to give yourself some coverage. Something just doesn't feel quite right here.
And then looking over at that hog market, Vince, it looks like that chart, it's been trying to mount a rally every single day, but we just keep fading deeper and deeper into the hole here. Is there been any news in that market that a guy should be aware of, or any favorable things that you've heard, or just seems like we're slipping further and further each day?
I think technically, as you noted, you want to rally in here, but we failed to get the bellies and the hams to get any price increases on those cutouts, and I think that's really what's holding that market back at the present time. Unlike the cattle market, the beef side of things, our year-on-year production is down from last year. So that's not hurting us, but I think it's just a movement of those two products in here. And we are coming seasonally into that time frame where belly should start moving pretty good.
And then overall, all the commodity markets, anything that you saw this week that you'd like to note, or any other news out there that you think a guy should be aware of looking at the next week here or the past week?
I think the big thing is if you're a wheat producer, watch that very closely in here. When Wednesday failed to take out Monday's high and you had the big reversal 30 cents plus off of those highs, it could be quite indicative that you might have a top in there. Would we like to run it higher? People think you can. Yes. Worldwide are really tight on stocks, so we got to worry about it. No, it's one of those things that would it be nice to think you could secure some $7 cash winter wheat if you could. You're not going to get rich, but you probably make it work.
And I think that's going to do it for this week's podcast. If we could be of any further assistance to you, check out the website, farmerstradingco.com, or give us a call at the office. Our number is 605 996 6500. Thank you.